The bounce that we saw in the Chinese market after the enormous stimulus plan presented by the People Bank of China has lost a tremendous amount of momentum. Almost 50% of the bounce has been lost in a couple of days. We need to understand that stimulus packages, particularly this one, which is a supply-side stimulus plan, don't necessarily generate multiple expansion, improvement in equities, and improvement in the outlook of profits of companies. Is it a positive stimulus plan? Undoubtedly. Why? Because it is a supply-side stimulus plan. Because it is lowering the cost of debt. Because it's lowering the cost of credit and improving the access and the availability of credit in the financial market. But that depends on demand. It depends on citizens and companies in China deciding to take more credit. And that is why it's a positive, because the risk of adding into the overcapacity indebtedness and excessive spending of previous occasions is very, very limited. This is the key of understanding what is good on a macro level and not necessarily a key to lead to higher multiple expansion in equity markets. It's good on the macro level because it is a supply-side plan that is triggering an improvement in access to credit, but that will not necessarily lead to more investment or more credit growth because it depends on demand. And as long as demand is robust, that is a positive. So supply-side measures are good. Demand-side measures are the reason why China has the current challenges. Demand-side measures led to the overcapacity in the real estate sector and overcapacity in some of the industrial sectors. So now, abandoning the neo-Keynesian policies is a positive for the macro of an economy that is going to grow faster than the average of the rest of the world, and that is going to grow faster than the United States, and certainly continuing to deliver between 4 to 5% growth as a positive. But we also need to understand that betting on multiple expansion in the stock market is a risky decision with supply-side measures.